Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a morning Forex report ahead of the U.S. jobs report. Today, the jobs is expected to show 205,000. That compares to 263,000 last month. The unemployment rate is supposed to remain steady at, actually move up a little to 3.6% from 3.5%. 3.5% is really the lowest level ever, and the average hourly earnings are expected to rise by 0.3%. That is on par with last month's 0.3% gain. Any surprises in those data will cause the dollar to move either higher or lower, as typically happens, but you always have to be prepared and understand your technical level, so that's what I'm going to talk about in this morning's technical report. Looking at the hourly chart of the euro versus US dollar, actually I'm going to put it to the 4-hour chart because this trend line cuts across here, and we fell below that trend line in trading yesterday and then rallied back higher here, and then before falling off back to the downside and closing below that trend line. That was a more bearish bias, but as you can see, the price has moved back above that trend line in trading today. I'm going to go back to the hourly chart just so that you know what that trend line represents, and you can see the move to the upside initially came up and tested the high price, the corrective high price here, and before rotating back to the downside, retesting that trend line and rotating back to the upside. Now we've come back up to what I consider a really key area here for the euro versus US dollar. Why? Because if you go back in time, now I'm going to just take a longer view of this. And if you go back in time and you look at this area here, we had a number of different swing levels through here, and it goes back even further than these points right through here, as a matter of fact, where the price reacted to this area, and we saw the market move away from it. All these arrows indicate instances where hourly bars came in and tested the area and then rotated either to the downside or rotated to the upside through here. And so in trading yesterday, we saw the price come down to that area. We found support buyers, moved up toward the this level here, which was equivalent to this low right here and this low right here. And the market found early sellers against that level and pushed down below this area, down through our trend line that we just saw earlier in this session. So now we have this area holding resistance here right before the non-farm payroll data, and it's going to be key going forward. Of course, if we move back above it, it's going to be more bullish, and we'll be looking for the a retest of the 100-hour moving average on the top side. If we move above that level and also above these levels right here, once again, we will see further upside momentum, and the bias would turn more in that direction. Conversely, if we find sellers against this 50% retracement, we're going to look back toward the trend line, which is an iffy trend line now, but the 61.8% retracement, and then we look toward this swing area down here between 0.971 and 0.97125. So that's the decision. This is the barometer for the buyers and sellers, and it's going to be remaining barometer going forward as well. So be aware of that. Trade above it's more bullish, and then trade above the 100 is more bullish. On the downside, watch the trend line, watch 61.8. And this area right here and these swing areas down here become the barometer on the next targets on the downside for the euro versus US dollar. So be aware, be prepared. Let's take a look at the dollar versus yen and get a feel for that. On the top side here, we have a trend line which held resistance fairly nicely in trading yesterday. And again today, high, 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 high. All these levels at the high become important. So and increase the level's importance going forward. So if we were to move above that level and get above the 50% retracement, that opened up the door for the upside with the 61.8% retracement, and this swing area through here between 149.55 and 149.70 is the next targets on the top side. So be aware of that. We are trading right in between the 100 and 200-hour moving average. How convenient. That is indicative of a market that's ready to be shoved one way or the other. So if the shove goes to the downside, what do we look for? And this, obviously, this yellow area here that I've earmarked really started back here before the market started its move to the upside through here, and then reestablished itself mainly through more recent time here we did see the sharp fall to the downside here, only to find the support buyers leaning against the level in early trading yesterday and pushing the price back to the upside. So get rid of all these arrows here. Here, what we know on the downside is get below the 146.81 to 146.98 would increase the bearish bias and have traders looking further to the downside. So those are our levels to get to and through. And then we look toward this swing area down through here. On the top side, if we move above the trend line, 50% retracement, we open up the door for a potential move up toward the 149.70 over time. Might not be today, but that will be our path of least resistance here. And in between these levels sits the 100 and 200 hour moving averages, which are really our barometer for bullish and bearish bias. So these moving averages, 38.2%, come in there. So that's key levels on the where the market is currently set. I'll wait for the next shove. All right, let's finally take a look at the sterling versus US dollar. I'm going to look at the 4-hour chart here because it spreads out really wide here in this swing area here between 1.12059 and 1.1253 is where the market is centered. In between that is the 200 bar moving average on the 4-hour chart. We last tested it here and moved higher, and then we came down and we tested it here and fell below it. And then in trading here today, we did move up to test it, and we did move above it, but stayed below the swing area on the top side. So markets in between those two, this swing high and swing low, and also just below the 200-hour moving average. Just quick and dirty, if the price moves above this swing area, the bias is more bullish, so above the 112.53 level. If we see more selling to the downside below 112, let's call it 112, and then head down below the 38.2% retracement, which was near our low yesterday, we should see further momentum to the downside with the 50% retracement area somewhere around the 110 level as the next key target on the downside for the sterling versus US dollar. On the top side, again, also we have the 100 bar moving average that if we get above that level, that would be more bullish for this pair. It's within the swing area. So there you have a look at some of the major currency pairs as we head into the jobs report. Go Beavers! That's the Oregon State Beavers. They're my team I'm rooting for this weekend. Good fortune with your trading. Be careful. We already had a wild FOMC trading day, so always be prepared. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.